Today is October 12th. Right now is 10:45 a.m. PDT, and the stock market SPX is at 3585. Now, for a while, throughout the month of September, rather the second half of the September, and the first few days, the 10 days of October, the market was pivoting around 3636. That was a previous June low, and something changed in the last couple of days. Since this week, market has, since last Friday, has gone lower since the new US regulation that came out that the Chinese government specifically cannot buy the advanced AI chips from the Nvidia and AMDs and others. And not only that, they would not be able to build their own chips and manufacture in China using the tools that the US provides, the US companies provide. For example, the ones that the CAD tools, the EDA tools that Metagraphics or the Semantic, the folks of the Silicon Valleys make to enable the chip designing. In addition, for the wafer technology, Lam Research and the ASML, they are the key players who enable the fab. You need those companies' tools if you want to develop advanced chips, which will enable you to do the things that the AI future that is expected to do. So in order to do that, you need those tools for wafer technology, and even those are blocked by the US. So overall, once this news came up, that kind of was complementary to the previous news that came up in September, that Nvidia and the AI chip selling, that would require some sort of licensing from the US, and that would prevent Nvidia to sell their AI chip to China to some extent. And now this act sort of nail in the coffin for the Chinese companies to buy the US chips to build their defense for the AI related, the futuristic defense technology that everybody is talking about. Now, once this news came up last week, the chip stocks, all of them went down. At the same time, AMD last week reported on Thursday, they had this the pre-announcement before the earning that they have about $1 billion less revenue expected for the Q3 due to the softening market on the PC industry. That news percolated throughout the semiconductor consumer space, bringing down all the chip stocks, and Nvidia was down from 133 to back in 125 level. And then this, over the weekend, this Sunday, this news from the US government, the new regulation came up. So that brought the Nvidia chip to 115, Qualcomm to 112, AMD still hovering around 57, as the bad news is already sort of getting priced in AMD, which is hit hard due to this consumer softening news, the pre-earning estimates. So all in all, this overall SMH, which is the semiconductor ETF, Vanguard Semiconductor ETF, got badly hurt with those those two big blows, bringing the overall S&P down. Overall sentiment was down, selling off technology as a whole. And now the new normal, new pivot point looks like is the previous low that that was on September 30th. That's 3589. That was a low. So now that is, the previous pivot point was around 3644, where S&P was kind of moving up and down from that level for the good part of the September. That level has shifted down to around 3585-ish level. Now, question is that what is the CPI data that will happen tomorrow. It'll be coming out tomorrow at 5:30 a.m. Eastern Time, Pacific Time, 8:30 Eastern Time. So if that data shows below 8, I'm thinking that we are going to go over 3,650. But earlier, as I thought that it's going to go straight up to 3,750, but that whole equation has now changed because of this chip act. This is like really what US is telling China, that game on. We are, strangling you with the intention for death. And what will happen if China cannot invest in those, not only for the defense, where this AI chips and the quantum computing are the key technologies that will enable them to do, go neck to neck with the US and the rest of the advanced countries in terms of the defense techniques, but it will also disable them from getting, significant advantage in the cloud computing space as well. So what US is telling China that you are on your own. You have been stealing technology from the good part of this last 2 decades. Now it has to stop. And basically this is how we are approaching, so that you are on your own to actually make any kind of 4 nanometer, 5 nanometer chip. Is going to be super difficult for them to do it. They're like 5-6 years behind the curve now in order to catch up, now that they cannot just get those chips and build their own supercomputers in China. So this is kind of like a similar approach the Trump administration took when they sort of banned the ZTE and Huawei back in 2018, 2019, and that really disabled the 5G technology, and how that will infringe the privacy space and the defense space by the Chinese government monitoring all the data going through this 5G network built by the Huawei and ZTE. So that sort of this the blow is now coming to this chip technology, the AI space, and basically this is outright telling China that US is ready to accept that they are in war. This is kind of the back end of the war. The who knows what the next phase will look like. The China will ban, for example, certain aspect like Tesla or Apple phone. That seems like an extreme, but probably not extreme. In next couple of years, how things will unfold. So I'm very, very pessimistic now for the stock market overall, for the US economy. This is kind of going back 100 years, because what this really does is that the thing that really built the US market, the open market policy that US has benefited for the almost last century, that goes away. It's like selectively choosing which countries can participate in US market. So that is complete departure. It's kind of like a 2 big blows in 1 year. The abortion law by the Supreme Court. I mean, I never thought that will happen in US, and and then this one, which basically even in the open market, the whole culture of the US gets a big blow from this announcement. But this is the world we live in. I mean, if US didn't do that, China was taking advantage of it, and the balance was not there. So I don't blame US to do this completely, but it's just that the situation we are in today, that globally the global environment is such that there is no longer this expansion, the globalization, and now we're going to see the contraction. So every country is going to make their own chip, is going to make their own food, their own supply, and it's anti-globalization wind is blowing all over the place. And the first leg was this Silicon, the Chip Act. They call it the anti-inflation, or the act that they passed back in September, back in August, and that was going to be the first leg to to, like on the face, it's to limit the supply chain issue, but actually it's anti-globalization or deglobalization. And then now this act is kind of going outright offensive, that not only anti-globalization, but it's more of a provincial, that world is going to be broken apart in 3 or 4 segments. Probably one segment will be the European and America, the NATO allies, who would go in their own way. Then the China and the market that China controls completely, like some of the African countries, or many of the African countries, which, by the way, the huge supplier of the key battery ingredient is the cobalt and nickel. Those will be controlled by China. That's how they'll also control many of the UN voting, which has been, outright in America's control for the last 1 century. That is going to change with China getting support from the Africa and the Pakistan and some of the Arabian world, where they made a lot of investment in the last decade, who are in, like a full indebted to China, and basically China owns those countries a large part. So they have no options. And then the Russia, who is a bad player, in the US eyes, but and then some sort of nexus between Russia and China may form, and then the Japan and the Korea, who are the US allies, that is going to bring some balancing act in the South China Sea. And then India, who is a floater, right, who kind of neither friend nor enemy to none of the countries. So they are going to maybe benefit from this, status quo situation. The last 2 decades, where India was pro-Russia in the last century, but then after Russia's sort of demise, the USSR's demise, they could not get really friendly with the US, but that still was not enemy with the US, as US needed them to counterbalance China. But now that China is completely in the other extreme, and India might play a good balancing role between the Russia and the US and the Chinese superpowers. So there's a world is kind of fragmented now in 3, I think probably 2.5 superpower: China, US, and Russia being sort of supporter of China, but not totally. And that way we are going to see the world orders will change in front of our eyes, very rapidly in the next couple of years or 3 years. So the stock market will not react as fast to all this stuff. So it's going to take some time and see that, how the earning report goes, how the Chinese react, what will happen on the October 16th China premier election, and what are the new announcements the Chinese going to make after the election, that President Xi Jinping, after he comes back in the power. All these things going to unfold. Then the next couple of months, the federal government, the Fed will probably pause the hiking interest rate, and probably in December they are going to announce pause, and that will probably bring the stock market up. So stock market up was due in October, but that is probably going to be postponed given the CHIP Act. But long term, I'm really bearish now about the stock market, which I was not before this specific US regulation came in this weekend. It looks like that the best approach now, that if S&P reaches 3,900, I think that's the high, not only for this year but also for the next year. And I highly doubt that S&P is going to, in the next 5 years, will break through the 4,800. I think we're done for a good part of this decade. It's probably going to go 5,000 maybe, in 5 years. I don't know, who knows. But generally, the growth stock, the technology stock, you'll get, think about the Caterpillar, what kind of return you got on the Caterpillar, or the likes of Boeing, or the likes of, JP Morgan. It was $100 stocks back in 2018, 2017. And now it is still $100 stocks in 2022. And think about what kind of return you got from Google and the Apples. It was a split considered. Apple was a $40 stock, in 2017, and now it's a $140 stocks in 4 years down. So around 3 times, 4 times return in technology stocks, and you got kind of like a flat return in the rest of the big S&P sectors, like the financials, like the industrials, like the utilities. So if you consider the tech is going to become the new utility, new financial, because of this anti-globalization, where large part of the tech industry is, their revenue comes from China, from the rest of the world, as much as from US. So almost 50% comes from globally from the other areas, and 30% almost from of that revenue comes from China. If that is going to go away, then the technology stocks will look very much like, the Caterpillars and the Boeings of the world, where your return is going to be very limited. And if this China story did not come up, so I would say that it's a phase and it's a buying opportunity. And in 2 years, we were going to see a huge return of our capital if we invest now. But with that news, I think everything is on stake. So I would not sell right away. I have to wait and see that what the Chinese reaction is. But I cannot imagine that it's going to be good. And the other thing is that there's a regulation on the Chinese stocks in the US market. There is this SEC is doing this investigation, and the result was going to come in September, and it didn't come yet. And I guess they were going to wait until the Chinese election, and then probably going to announce something. And that is a possibility that there is the Chinese stocks here, like Baba and Baidu and likes, will leap off, will go up. Or the worst case, it can actually go down. But if it does rip off, I would take this opportunity to sell if you have positions for those. So overall, for the next, I will just raise cash. Any opportunity I get, 3,800 S&P, if it goes there, 3,900 by the end of the year, I'll sell equities all over. I will take cash positions. I'll probably buy multifamily with all the cash I can, or even if I cannot afford a multifamily, any other real estate investment, I will buy alternative asset. I will buy, investments in India, which is actually the best position, I think, in the next few years for investment. I would probably even buy US bonds, but no stock. I think we're done with the stock. Not the ones that I follow in my wish list, which is mostly technology stocks, some financial stocks, and not the one that is the retail and others, which probably going to stay. The cyclicals ones are going to be not going away anywhere. The Russell 2000 is not going away anywhere, but those are not the one I follow. The ones that with the high growth, the ones which had immense promise, the ones in the the car industry, the automated SOCs, and the automated driving, the robotics. So a lot of those revenues are going to come from the Chinese, from the globally, and that's gone now. That's probably dead now. So I'm sorry to say that this is the most bearish I've ever been, but this is for sure that we are in a new era now, and we are done with the US stock market for a while.